What is going on, guys? This is KOJOFOREX, aka GBP Legend, aka Sniper Trader. Welcome back to my YouTube channel, right? The only channel that is going to be real with you when it comes to anything Forex trading. So in this next series of videos that I'll be uploading on YouTube is going to be filled with educational content. Yeah, I've got you guys hitting me up a lot in my DM asking that I teach you new things about the Forex market. So yeah, you guys have listed a lot, and then I'll be going through all of them in series of videos that I'll be uploading in the next couple of weeks coming. But today what we'll be basically focusing on is the Fibonacci. I've had a lot more of you coming into my DM asking that I teach you how to use Fibonacci and what it means to use that tool or that indicator. So yeah, a lot of people see Fibonacci as an indicator, but I only see Fibonacci as a tool, right? Yeah, so people see Fibonacci as an indicator for entry or for taking trades in the market, but I see Fibonacci as a tool to enhance entry on the Forex market. So in the next couple of minutes, I'm going to dive right into the charts and then teach you guys everything you need to know about Fibonacci. And this is the only video you need to watch about Fibonacci when you're on YouTube. So see you guys in a couple of minutes. Yeah, guys, so yeah, without wasting much time, we're going to go right into Fibonacci and all about it. Yeah, so initially in that introductory video, I told you guys that I do not see Fibonacci as an indicator. I see it as a tool to enhance entry on the Forex market, right? I see a lot of people using Fibonacci exclusively to take trades on the market, but I only use Fibonacci as a confluence, right? Or as an added aid to give me refined entries on the market. And then you're going to see how I do that and what it means to do that as well, right? So first off, if you want to know about Fibonacci or all about it, right, you can easily Google Fibonacci, right, and read all theories about it. But in this video, I'm not going to waste much time in delving into Fibonacci and what it is, right? I'm going to go right into what it means to use those tools for Fibonacci and then how to easily interpret the Fibonacci tool, right? So you can see that here we say Fibonacci retracement levels connect 2 points, right? I'm gonna explain what it means to you as well. Most commonly used ratios are 23.6, 38.2, 50%, 61.8, and 78.6. This is what you need to know. But when it comes to me as a trader, I only focus on the 50%, 61.8, and then the 78.6 retracement level. So if you want to read more about Fibonacci, that's the link. You can Google it and then read all about it. But yeah, so let's delve straight into the chart. So you guys are aware the market doesn't just move in a straight line, right? So if the market moved in a straight line, this is how it would have looked like, where the market would just move from one point and then keep trading all the way up, right? If it did that way, what it meant was that any time at all, people would have been insanely rich because all you need to do is just jump in on the trend and then buy at any point at all. The market will rally up and then you keep making money, right? But we can realize that in reality, it doesn't happen that way. The market moves in random wave of movement, right? Where it goes either up, comes down a bit, goes up and comes down a bit, or it moves in random wave of movement on the downside overall, where it comes down, pushes up a bit, comes down, pushes up a bit, and so on and so forth, right? So Fibonacci as a tool, like I said, which I don't always apply it as an indicator, only strictly as a tool, is only to enhance you to find the level of a pullback or what we call a retracement after every wave of movement in the market, right? So let's say the market moved from swing point A to swing point B, right? So let's label this point A and then let's label this point B. What it means is that after the market hit this point, it is likely to do what? To pull back a bit, right? Likely, remember the word I used here, likely, to pull back a bit before it does what? It continue in its prior movement, right? So Fibonacci as a tool is measuring that possible pullback, right? To say this is where the market is likely to stop before it does what? It heads upwards. So you can see that the narrative eventually boils down to probability. That's why we have Fibonacci ratios or levels, which I showed you in the just in that link that I showed you guys a couple of minutes ago, which we talked about the 23.6, 38.2, and so on and so forth. So at the end of the day, it becomes more like a percentage ratio of a pullback probabilistic kind of activity, right? So here saying the market is moving from point A to point B, and we're literally considering point A to be 100% and then point B to be a 0, right? So it means that from that 0 to 100, this is we looking at the market in an uptrend, right? From that point 0 to point 100, every pullback is going to be regarded as a percentage into that 0 to 100 movement. So if that is considered, then we can label this midpoint as what, 50%, right? I believe you guys are following. So if here is considered 50, then we could say here is what, maybe 25%, because that is half of the 50%. And then here could also be considered as what, 75%, right? And so on and so forth. So yeah, with this understanding, then we're heading towards a good point in understanding how to use the Fibonacci tool. So Fibonacci has got what we call golden ratios, right? But I even don't really consider it in terms of using that terminology, golden ratio and all that. They are just hyped up things. I only consider them as a ratio, probabilistic ratio for us to find refined entries in the market. So with this understanding, I'm saying the midpoint here is going to be 50%. Then with the understanding that I only focus on these three levels in the market, right? Let me quickly go back there for reference sake. With the understanding that I only focus on the 61.8, the 50%, and the 78.6, then it means that I would only consider retracements when the market pulls back half of its prior movement in any trend or in any swing point, right? So here is 50%. I'll be interested in seeing how the market works. And then next one will be 61.8, which we could consider maybe somewhere around here. And then the next one is what, 78.6. Then that will probably be somewhere around here. So all I'm saying is that anytime the market pushes from A to B, if it's pullbacks into the 50%, I'll be interested in seeing how it reacts here before any push on the upside to continue the trend. Or if it pulls back into the 61.8, then I'm interested to see how it pulls back here before it pushes on the upside. Or if it pulls back into the 78.6, I'm interested to see how it reacts here before it continues on its prior movement, right? So you still realize that everything has to do with probability, because you're wondering, how would you know that when it hits the 50, it's supposed to go up, or when it hits the 61.8, it's supposed to go up, or when it hits the 78.6, it's supposed to go up? That is why I do not use Fibonacci exclusively in taking trade as many people do, right? I only use it, like I said, to enhance entries on the market. So next off, I'm going to go into my Fibonacci settings, and then you guys see how I plot my Fibonacci, or how I level them up, right? So this is basically my Fibonacci tool, right? You can see I have here the 100%, the 78.6, the 61.8, the 50%, and then the 0. And then I've got Fibonacci extension here, which we'll talk about later, maybe in subsequent videos, right? So if I push up here, if I click the settings, you can see that I have favorited the 0, the 61.8, the 1, the 50%, 78.6, and then the fib extension. These are my colors. You can copy them if you so wish. And then if you come here, I like to represent my Fibonacci in percentage as to values, and I like them to be displayed on the right side and then in the middle. So that is simply my Fibonacci setting. So what this means is that I'm looking at, if any scenario at all, the market should move from, let's say, point A to point B, which will definitely be this 0 to 100, then I'm saying if the market pulls from that 0 point into 50%, is it likely to push up from 50% and continue that prior movement on the upside? Or is it likely to pull into the 61.8 before continuing that prior movement on the upside? Or is it going to pull into the 78.6 and continue that prior movement on the upside? So at the end of the day, it all boils down to probability. But I'm only and only always interested in the market only when we're trading beneath that 50%, or exactly hitting that 50% for a pullback or for continuation in the market. So yeah, in the next series of content, let's see how we can apply that in real market scenario, right? Or maybe backtest some few occasions to see how we could have used Fibonacci to find refined entries on the market. So this is currently me looking at pound Japanese yen. We're going to look at certain scenarios where we would have considered to use Fibonacci, right? So I'm just basically backtesting to see, because like I said, you're not going to be able to use Fibonacci at any point in time at all in the market. They help you once in a while to find a certain level of entries in the market, right? So let's say a scenario like this, right? Fibonacci is best used with understanding market structure, right? I'm not going to lie to you, but market structure is also something that I'll delve in subsequent video. So if you look at this market, right, overall we're being in what some sort of what a downtrend, right, making lower highs, lower low formations, right? We hit this point, right, which is one of my key zones in the market, and then we push up. So you can see that what overall the market was moving from this upward movement all the way onto the downward movement, and then this was what basically the last low we had created before this prior low here, right? So this was the last low before this prior low here, right? And then this was what the lower high, lower low, lower high, lower low, lower high, and then we made what a low here, which didn't exceed this last low here, because market structure wise, then the market was supposed to go all the way down and create new low, and they would have said, oh, we are in a downtrend because we're just going up, down, like that. But in this scenario, you can clearly see that the market failed to trade beneath that last low. So indeed, once the market is failing to trade beneath that last low, then we can anticipate for a trend change in the market, just like we have observed here, right? So if you look at this, we were trading down, up, we push here, which made some sort of what an inverse head and shoulder, break it, and then continue on the upside. So let's see how Fibonacci would have helped us to enhance our entry in this kind of scenario, right? So after looking at this, I would always be interested in this low here. Why? Because I understand chart patterns as well. And when I see they clearly represent what inverse head and shoulder, where we have the left shoulder, the head, and then we're running into the right shoulder. So exactly when the market taps into that right shoulder and then it starts to reject here, start to show some reversal indications, then I start being interested here. Then I will quickly enhance that entry by finding how Fibonacci is reacting on that level. So if I put Fibonacci on this, we can clearly see that we were playing or reacting exactly on the 50% level. Can you guys see that? Right? It aligns exactly with the 50% Fibonacci level. So with that, then I can be confident after I find other confluence or other confirmations of entry, and then I would want to be first off, I'll be interested in looking at how the market reacts in this range, right? And then next off, what I'll do after this is basically measuring my risk on this position, right? So I'll show you how I do that quickly. So what I'll do is that after I found the Fibonacci level that I'm interested in, then I want to measure my risk. And how do I measure my risk? I use the risk tool. Because we'll be going long from this range, right? So I'll look at how the market is going to trade from here. And then with this one, if you're finding an entry, putting your stop loss beneath that entry range, and obviously with a pound pair like pound Japanese yen, which has a high pip movement, you most likely be risking about 40 pips on this kind of a trade. Looking at taking the entry on the 4-hour with a safe place to put your stop loss, right? And then your take profit could be either of the new highs, right? So you could have take profit one being established in this prior high here, right? You could have take profit one being established in this prior high here, or take profit two being established in this prior high here, because you can obviously see that these are previous resistance range, and then the market is likely to react when it gets there. But you can see that in the second one, it smashed through it and even went further up. So if anything at all, as a swing trader, I would always want to see my take profit at the take profit two, which should have been here. So indeed, this would have given us a great risk to reward trade of 1:10, means that we basically risk 1% and made 10% on this trade. So this is how Fibonacci would have enhanced our entry, supporting the fact that we are making lower highs or equal lows or inverse head and shoulder, and then finding an entry on the left shoulder, right? So I'm going to take one last scenario again, or a couple of scenarios, quickly backtesting into it, and then we see how Fibonacci has helped in finding refined entries in the market as well again. So like I tell you, it's not always going to apply. So once it does apply, then you know how to use it. Then you can make informed decision to take entries on the market. Now I'm going to go into Euro, New Zealand, dollar, right? So there's a series of formations at some point in time in this market where Euro New Zealand dollar was acting so sweet with respect to Fibonacci retracement. And I'm going to quickly go all the way into the chart and backtest how we could have used that as a decision point to find continuous entries in the market and make a lot of money, right? But it would require a lot of patience, a lot of skills, and a lot of intelligence. So if you look at this, right, prior to this movement, the market was in an uptrend, right? Again, you must understand market structure that I said I'm going to explain in subsequent videos. But if you look at here, this was coming to the pinnacle point of this trend. So once this market hits here and then we weren't able to make any previous high in terms of trading exceeding beyond this range, I knew that the trend was changing and we were going to go in a continuous downtrend. So if as a sniper you weren't able to find an entry for a sell in this range, then your best next entry would be catching the market from that a lower high before we made a lower low, or any next of lower high formation that the market makes. So how are you going to be able to get entry on this lower high before the market takes off in that continuous direction? That is why I said what Fibonacci is going to help you to enhance your entry before you add other concepts or other confluences to also take on that position. So let's look at if we miss this entry, how would I have been able to get an entry here? So again, this time we're looking at the downtrend. So here becomes the 100%. Here becomes the 100%. And then down here becomes the 0, right? Always we're looking at Fibonacci from swing point. So don't forget that, right? So we're going to measure this swing point of the market movement and then the retracement before the continuation, right? So let's plot our Fibonacci tool quickly on this and see what Fibonacci level reacted nicely on this. So if we plot our Fibonacci from this swing point A to swing point B, then we can see that the market again was reacting in the 50%. Obviously, like I told you guys, you need to find other confirmations to see if indeed that level is holding, which I will be teaching in subsequent trading videos, right? So this one would have allowed us to be interested in this range to find an entry to continue this market down. So after the continuation, I would have typically expected this market to trade all the way to this fib extension of negative 27, which is something I'll explain later. I can clearly see that this market failed to do that. And then when it hits back to the zero level, then it started consolidating and pulling back up. So indeed, if it did that, and then we're supposed to still find an entry to continue this trend, what we need to do is now adjust our Fibonacci from this point all the way to this new swing point. And then when we extend it again, we can see that this time it wasn't reacting on the 50%, but the 61.8 retracement level. That typically means that the market swings from this point, pulled back into the 61.8 level, which is here, before it continued its movement all the way down. So after finding an entry within this range, right, you can use the risk to reward tool to find how much of percentage you would have been risking and what was the probable percentage you could have potentially gained, right? So if we do this and then we plot our Fibonacci here, maybe we're risking the same 35 pips or 40 pips on this trade, and then we're supposed to hold this trade on to this point, which is about 245 pips, would have been making 6% on this trade. And then again, Fibonacci only enhanced us to find an entry in confluence with other concepts that would have been added. So yeah, we typically found 2 trades on this market just using Fibonacci, right? So again, I'm going to use this last scenario to also define how we would have got an entry on this one. And that would be it for this video concerning Fibonacci. Right, so after that swing point, then here becomes our new swing point again, swing point A, and then new swing point B, and then we find what the market in this continuous movement or a downtrend, it pushes up, again taps on the 61.8 retracement, and then continues the trend in the market. So you can see that this is how the market has typically moved. It pushed down, it pushed up. We used Fibonacci to find an entry. Here was the 50%, and then it continued down. It started consolidating on a sideways movement. Here was a 61.8 retracement, and then it pushed down again. And then it started pushing back again. Here it tapped exactly on the 61.8 again, and then it continued all the way down. So with Fibonacci, we would have been able to get entry 1, entry 2, and entry 3, right? And then this trade would have been enhanced even better if we apply the trend line concept, which I would explain in subsequent videos. Yeah, so that comes to the end of this Fibonacci lessons. If you like this, obviously you need to smash the like button, share with your friends, let them also learn about Fibonacci, and don't forget to subscribe. Let's hit that 10K mark before this month ends, and then I'll be sharing insane content with you guys. This is just a tip of the iceberg, right? I've got insane content, insane knowledge for the past 7 years that I'm willing to share with you guys. All I need with you is also smash the like button, share it, and then promote the YouTube channel so that I'll be motivated to put out more content for you guys. So see you in the next video. Yeah guys, so if you like this video, obviously you need to smash that like button. Also make sure to subscribe to this channel, right? I told you guys that we're heading towards the 10k mark, so help me subscribe so that we hit that 10k mark. Also make sure to follow me on all social media. It's always KOJOFOREX on Instagram, Facebook, Twitter, everywhere. And also make sure to click in the link in the description to join the Telegram community, where continuously and for free I've been sharing trade signals, sniper trade signals, and then people make a lot more money, so you can be also a part of it and make money for yourself. So yeah, with that much ado, see you guys and peace out.